Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
This is a podcast from HSBC Global Investment Research recorded for publication on Friday the 10th of October. Analyst certifications, disclosures and disclaimers must be viewed on the link attached to your media player.
Hello and welcome to the Macro Brief, where we look at the issues driving financial markets across the globe. I'm Aline van Duyn, Global Head of Editorial and Multimedia, and this week I'm back in New York and we're taking a closer look at Latin America. Now, Brazil has been in the headlines. President Trump has been speaking to President Lula in what is reported to have been their first substantive conversation since the US imposed 50% tariffs on Brazilian goods. Mexico and the US continue to be in constant dialogue about trade. In fact, next year, a review of the USMCA, which is the trade pact between Mexico, the US and Canada, is looming. In Argentina, there are questions about whether President Milei can continue with his reforms. So a lot to unpack, and to help me do that, I'm joined by Joseph Incalcaterra, our head of LatAm macro strategy. Joseph, welcome to the Macro Brief. Let's kick off with Brazil, because you were there recently. What were your takeaways? What's the mood amongst investors?
So it was really interesting because we hosted our inaugural Brazil Global Forum, which was a conference that not only explored local themes such as, central bank and local growth, but actually linkages between Brazil and Asia, right? And given the strong trading relationship, but also strong interest in Asian assets from local investors, I think this was quite interesting. We had Chief Economist for Asia, Fred Newman, was there. And it just we see more growth actually happening in that relationship.
So that's trade growth between Brazil and China?
I think that's one aspect of it. In the first Trump administration, we did see an increase in growth between Brazil and China, and that's probably going to happen again this time, maybe even in an even more pronounced way. So this is definitely something we're going to have to keep an eye on, and it just, I think, reflects shifting patterns in global trade.
So before we get into that, let's just quickly set the scene in terms of where we are in the Brazil economy and markets. Definitely some challenges. There definitely has been some volatility, especially in the currency markets. There's been headlines around concerns there. Just give us a quick summary. Where are we?
Yeah, so it's been a roller coaster. If you remember, 2024 ended on a very dramatic note. The currency depreciated sharply, and the central bank was forced to do very strong intervention, right, to defend the currency. And actually ended up being quite pivotal because not only were they able to basically put an end to the depreciation, but thanks to shifting local policy and political factors, actually BRL has been one of the strongest performing currencies this year, right? So we started the year on very dramatic terms with a depreciating currency, and this has been now one of the biggest EM trades.
And that has really defied expectations?
I would say so. I mean, we were quite bullish on the BRL earlier in the year. We thought that the depreciation was overdone, given the fundamentals of the country, which is strong growth, a cautious central bank with very hawkish monetary policy, political risks that we thought were manageable. So we thought it was too much. It had gone too far. And indeed, we are sitting in an area now where we can say that, the worst has passed. And I think most of this was on the local side. You did see fiscal risks start to fade a little bit compared to where we were earlier in the year. And then more meaningfully, I'd say around the summer, the Northern Hemisphere summer, you did have, some optimism about how the elections next year would go. Those assumptions have been challenged a little bit. And then you had the tariff, the tariff escalation between the US and Brazil. But now we stand in a scenario where things are normalizing a little bit. The elections are still some ways away.
So in 2026, right?
It's in October 2026. So the market tried to trade that theme, and you can actually still see maybe the equity market reflects it a little bit more. But when it comes to currency markets, for example, investors are saying, look, where else do you have a 15%, policy rate? So the carry is extremely high, and volatility has come down. So carry to vol ratios are high, and it's a perfect carry trade. Mm-hmm. So there's actually quite a lot of optimism towards the currency right now. There are some concerns because it's a crowded trade, and we actually still do see risks with how the politics can evolve in the coming months. But for now, there's a lot of optimism, and the carry trade is in full force.
So what are the main risks that people should be focused on regarding Brazil? And we can talk more broadly about the region in a minute. But is it still fiscal issues? Is it trade and tariffs? Or what are the main risks right now?
Really, everything comes down, I think, to the elections next year.
Okay.
That's the main factor. And many market participants see this as a bit of a binary outcome, particularly on the fiscal side. So a lot of, variables really relate to that. But I would say in the more immediate term, you had this 50% tariff put on by the US. That created some concerns, but we never thought it was, extremely important for the local growth story. Trade is fairly small in Brazil as a share of GDP. There was a lot of exemptions to these tariffs. But we do see finally some positive signals coming from the diplomatic channels. President Trump and Lula met during the UN. They're scheduling a meet. They had a phone call the other day that went well, and they're scheduling an in-person meeting. So things have even changed on that front quite rapidly.
Yeah. A lot of rapidly changing headlines, really, related to this.
Exactly. So that's been helping sentiment a little bit. And, for the rest of this year, we think the fiscal concerns are going to take the back seat. The fiscal accounts look okay. But really, it's probably going to be early 2026 where the market starts to play out, scenarios for the election.
Yeah.
And if it's perceived that President Lula's approval rating is going up, if he's gaining more support, the market could see that as something, as a source of volatility. And especially given that, the fiscal accounts next year will be in a lot more focus. And the government will probably have to make cuts to meet the fiscal rule. They might be reticent to do that. So you could see how these factors could come together to spark volatility.
So in some ways, the fiscal pressures are slightly on the back burner, but they're going to rise to the fore next year. And then that becomes more of an issue, especially with the potential for policy change post-election.
Exactly. On the back burner for now, which let's say opens up a little bit of runway for BRL to remain somewhat strong. But next year, not only will we have the near-term fiscal concerns of, is the government meeting the fiscal rule? Are they matching the accounts? Then also longer-term fiscal concerns, meaning, are we going to see any change in the overall fiscal management of this country? And that, for many investors, is seen as kind of an existential concern for Brazil, given debt to GDP close to 80%, policy rate of 15%. The debt dynamics are a bit unsustainable.
Yeah, and to be honest, it feels like we have had that conversation many times before, right? So it's a recurring issue, recurring risk, and it will be at the forefront next year.
Exactly. And investors are hoping that, the elections could allow for a change in the overall fiscal regime. So to the extent that that doesn't happen, or that appears that that might not happen, that would be a warning signal for local assets.
Yeah, interesting. Now, one thing you said is just that Brazil's economy is not as tied to trade. It's obviously a relatively closed economy compared to the other big economy in the region, Mexico. So let's switch our attention to that. Presumably, trade tariffs have been having a bigger impact, or again, has that surprised a bit in terms of resilience to some of these headwinds?
Yeah, it's been actually a massive positive surprise, because currently Mexico has some of the lowest effective tariff rates in the United States. That's mostly because USMCA remains in effect, right? Taking a step back, we came into this year expecting the worst for Mexico, right? He was talking about, tariffs on Mexico even before he assumed the presidency. And this also, to put it in perspective, comes after a very difficult year for Mexico with elections that, went the way investors weren't expecting, the judicial reform that was seen as hitting, the structure of the economy or the political system.
It seems like really this year started with a lot of concern across the region. I mean, you just described Brazil, the currency pressures there, now Mexico. The beginning of the year followed a really tough 2024.
Yeah, big concerns in Colombia as well, with fiscal situation there. In Chile, you had a more uncertain growth outlook, let's say, and the threat of copper tariffs coming through, and numerous factors. So yeah, and we were. It was a very nervous situation for LatAm earlier this year, and now fast forwarding to where we are now, a lot of those risks have actually cleared, and growth is actually holding up okay. Maybe the disinflation trend hasn't been as linear as we would like, but central banks are taking that into account. So yeah, I would say that a lot of those risks have cleared up. And going back to your point on Mexico, Really managing the trade relationship with the United States, striking that right balance, preserving USMCA. So we're currently in a scenario where investors, I would say, are quite comfortable with Mexico. They see the risks as being very limited. The growth has been weak. We did see a sharp deceleration in activity this year. Part of that is related to this trade uncertainty because, as long as there's question marks about USMCA, that does hit investment.
Of course.
Yeah. But I would say that, the forecasts for Mexico have actually come in, or the growth has come in a lot better than some of the more dire forecasts from, some of our competitors earlier this year, which didn't materialize.
And Joseph, looking at this in the global context, because of course that's something that we're always doing as a team, as a department, where does LatAm sit in the emerging market landscape? Because a couple of years ago, especially on the currency side, it was like a regular outperformer. Then last year, slightly opposite story. This year, is it doing better than other emerging markets? Is it in line? Where does it sit?
Yeah, I would say lately we have seen broad-based LatAm outperformance across asset classes. You see it in the FX space, especially the high yielders. So BRL, MXN, the Colombian peso, all three currencies have done extremely well. They're high yielders. Volatility has come down. These lower policy risks really matter. I think, it's been a very strong few months. I mean, now it's not just Brazil where we have elections. We're going to have elections in Chile in November, in Colombia and Peru in the first half of next year, and then, of course, Brazil later in the year. But I would say that, for most of these elections, investors are assuming, let's say, relatively market-friendly outcomes.
Right.
And I think this is front and center in Chile, where we have the elections coming up, the first round on November 16th, very high likelihood of a change in government. And that would have, pretty important implications, I think, for growth and for just overall sentiment towards Chile.
So likelihood in terms of what the polls are indicating that there is likely to be a different administration elected, a different party elected, and there would be the introduction of more conservative economic policies. Is that the expectation?
Yeah, I think so. I mean, Chile's had, it's coming out of a left-wing administration, which, actually has generally been putting forward quite moderate policies. But what we're seeing in the election polling is José Antonio Cast with over 70% probability of winning, according to Polymarket. And the polls are telling us, I think, a similar situation. So, if you look at his policy proposals, it's all about fiscal consolidation, so maintaining a low debt to GDP ratio, which investors always like, deregulation, particularly on the permits for FDI and mining, which is an important part of the economy. So strictly from how market participants are looking at this, these are generally pro-investment policies, pro-growth policies. So the market is happy with that. I don't think it's reflected in the FX market, actually, because if anything, the Chilean peso is a low-yielding currency. So in an environment where we are right now, which is all about yield and carry, CLP doesn't really screen as very attractive. But I think the argument for Chile is more of a re-rating story. So if you look at FX valuation metrics, which are a bit theoretical, we acknowledge that, but it does suggest that the CLP is very weak. And in particular, I don't think it reflects what we're seeing in terms of trade, which is fairly high copper prices, right? Even with the volatility from tariffs, copper prices surged and then collapsed. They're still well above where they were last year. Oil prices are lower. Chile is a massive exporter of copper, massive importer of oil. So that copper to oil ratio really matters. And I just don't think CLP reflects these terms of trade.
So, Joseph, another question, sort of broadening the perspective out again. How closely linked is the outlook for Latin America to what's happening in the US? I mean, there's a lot of uncertainty there too, obviously. And with these elections coming up in LatAm, with the relative resilience in the last 6 months especially, how important do you think developments in the US are for the outlook, or is there a little bit of separation?
No, I think it does matter. I mean, historically, look, Mexico and the United States, for example, have always had a very tight relationship because of remittances, financial flows, investment flows, trade flows. Colombia has a strong trade relationship, historically a free trade agreement, also remittances. The rest of the South America is somewhat less tied to the United States, more to China. But what I will say is that the U.S. is showing much more interest in Latin America as a whole compared to before this administration. You see that with Marco Rubio as the Secretary of State. The U.S. is taking a much, I think, stronger, is focusing a lot more on Western Hemisphere affairs. You see that with what's happening in the Caribbean, with kind of some of these anti-drug policies and, of course, immigration policy in the United States. You also see this with economic relations. So, the tariffs between the United States and Brazil. If you look then at, United States support for Argentina, which is tremendous, right? $20 billion of stated support. This is the last time this was done was Mexico in the mid-1990s after the tequila crisis. So these are very kind of assertive policies,
Mm-hmm.
So what happens in the United States does matter. I think the immigration policies are going to continue to matter. So I think this is going to be something that we're going to have to continue focusing on.
So look, let's end with a quick update on where we are with Argentina. What's our house view? What are our expectations there?
So I think the overall, reform agenda remains in place. President Milei is going to continue trying for fiscal consolidation, bringing down inflation, and a gradual relaxation of kind of some of the capital controls that are in the country. But, the elections in Buenos Aires that happened in September were a negative shock to this story. And there are parts of the market now that are starting to consider, a scenario where there would be a change of government eventually, and that President Milei wouldn't be able to finish his reform agenda. So I think what happened from the United States, that's a lifeline that buys him a little bit more time. But ultimately, President Milei needs to turn around his political situation, right? He needs to get more support, and perhaps this was a wake-up call that, he needs to change some of the policies. But I do think the overall reform trajectory will remain in place. But let's just say the risks to this have increased quite substantially.
So it sounds like the next few months could be a period of relative sort of stability, opportunity in the region, some strength in Brazil, in Mexico, but elections and political risks are looming.
Exactly. I think we're generally positive on the region, but I think there's actually quite a bit of volatility that could come through in the next few months. So in the case of Mexico, it's all going to be about USMCA. They've done everything well until now, but President Trump is talking about a renegotiation of USMCA, or potentially even breaking it down into different agreements and not being one together with North America, which hits at that kind of North American integration story. In the case of Brazil, I think, depending on how polling evolves and fiscal risk next year, we could see some change in sentiment, actually. So even though I think we're fundamentally positive on the region over the medium term, I think there are going to be some sources of volatility in the next few months. So we're keeping that positive fundamental view, but being aware of sources of volatility and risk in the near term.
Well, Joseph, thank you for the update. It sounds like we'll have lots more to talk about in the coming months, so hopefully we'll have you back for some updates on Latin America.
Indeed.
Thank you.
Thanks for having me, and I'd love to be back.
Now, before we go, a reminder that at HSBC Global Investment Research, we cover economies across the globe. Latin America is, of course, not the only region where politics and policies are in the spotlight. Check out our reports on a new era in Japan after a new Liberal Democratic Party leader was elected, and she's likely to become Japan's next prime minister. That's Sanae Takaichi. She has in the past supported expansionary monetary and fiscal policies, and we expect a period of policy uncertainty ahead. Uncertainty is also high in France after the prime minister there resigned, making it even less likely that a budget will be voted on by the end of the year. And in the US, the government shutdown continues. So lots to analyze. Please check out our website for more. And if you have any questions or comments about anything we've talked about, please email us at askresearch@hsbc.com. Don't forget to like us and subscribe to the Macro Brief wherever you get your podcasts. Until next time, thanks very much for joining us here on the Macro Brief.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.